Hello everyone, welcome to the Ichimoku charts.com hourly analysis for the Aussie dollar US dollar FX for Tuesday, August 13th, 2013. Well, a downtrend in this market at the moment. The current candle that we're analysing is the second last candle on this chart, and we have a market that's made a lower high and a lower low and a fairly large black body candle. The black body denotes the sellers making a decent amount of net bearish progress, and the final candle that we're looking at here on this chart is still currently developing and is almost about to conclude trading within the next few minutes, and certainly may be significant. And if the candle actually finishes as it is, we could have a potential tweezers bottom pattern, and here we have a decent downtrend leading into this area. Two candles where the lows are roughly side by side, and we're now seeing some buying coming into this candle at the moment, so we can't fully analyze that candle at the moment. But if we have that low maintaining price action around that level, it may be a potential reversal to the upside. So tweezers bottom needs confirmation, so we'll be looking for a potential higher high and higher low on the next candle. Now, just looking at how price action has developed over the last few days or last week or so, and we saw a bullish breakout above the cloud and then a retracement back to the within the cloud, finding support, and then the market trading well up above the cloud for a very strong bullish market, trading within the cloud, retracing back up within the cloud, finding resistance at the Kijun-sen as we did at the previous peak, and then selling off for a bearish signal with yesterday's trading, with the market trading down below the bottom of the cloud on a very bearish candle. The market then traded down to the second pivot point level, being rejected from that area on an indecisive spinning top type candle, rallying up towards the higher pivot point level of support and finding resistance around there. At the moment, the market has opened below the middle pivot point level for the new trading day and is trending down towards that first pivot point level of support around 90.75. If the market does rally here in a potential reversal pattern on the candlesticks with that tweezers bottom, we should look to the middle pivot point level around 91.12 to act as an area of resistance, and we also have the Kijun-sen trading around that area. We can just see the flat area of the pink line there, and that has potential to hold as very strong resistance, and a likely scenario is the market rallying to there, and if we see selling coming in, we could see the market sell off once again and test back down to around this bottom pivot point level, the first support level. That first support level coincides with the swing low that was made in the recent past here, and should hold as very strong support. If we do see strong bearish activity down below there, we could quickly see the market testing down to the second pivot point support level down at 90.38, so let's be aware of that. In terms of overall Ichimoku, we have the market trending down below the cloud, so we have a bearish market in that long-term time frame, and trading down below the Kijun-sen and the Tenkan-sen, so bearish in all three time frames. So a likely scenario is to see the market rally to some point if we do see this pivot, this candlestick reversal pattern confirmed, and then perhaps sell off again. In terms of the Fibonacci extension, we're examining the relationship of this current first time frame downtrend that the market's in to the previous time the market was trending down, and here we've seen the market trade through the 100% level on its way to testing towards the 161.8% level, and we are now seeing some buying coming in, so it isn't really giving us any guide. But the thing to watch out for here is that if this trend doesn't change, and remember we do require confirmation of a change of trend, there is potential for the market to find very solid support down here at the 161.8% level, and that 161.8% level corresponds pretty much exactly with that first pivot point level of support, so there should be very solid support down around that area, down around 90.75. And also in terms of the Fibonacci retracement of the previous first time frame upswing, and here we've seen the market trade through the 100% level and was testing down towards the 161.8% level, but that 161.8% level corresponds exactly with that second pivot point level and should hold as very, very solid support. So significantly, if the trend doesn't change immediately here with this potential Japanese candlestick tweezers bottom, if it does continue down, we should look for buying to come in there. But if we do see solid bearish activity down below there, it could suggest that the area is not going to hold and there is potential for the market to trade significantly lower. Now, in terms of patterns in this market, we have seen some sort of an ascending triangle. Here we have the prior trend leading into the congestion area. We had the market making pretty much equal peaks within this pattern, but the lower boundary of the pattern had the market making higher troughs, and this suggested that the more likely scenario here was a possible breakout to the upside because of the higher troughs being made. But we know that these patterns have a dual role. They do tend to be reversals when we have a market in a prior downtrend, but they can also be continuation patterns. And then we had the close down below the bottom barrier, and the market has developed the trend following that breakout to the downside. The target is the width of the pattern projected down from the breakout, so it gives us a target roughly just down below this first pivot point level of support. So a target that may not be met for this market, but certainly a successful breakout down below and a successful close down below, completing that ascending triangle type pattern. But just going back to the Fibonacci, to the Ichimoku indicators, the market is bearish in the long-term time frame. We had the bearish breakout giving us a bearish signal some time ago, and here we have now seen, just moving on, the market has moved on to the next trading period, and we do have officially a potential tweezers bottom pattern. What we're looking for is confirmation here, so the high of this current candle here becomes very important. The market isn't developing fairly quickly here, however, perhaps to the downside, so we might not see confirmation of that pattern, but let's look for a higher high and a higher low. Back to the Ichimoku, bearish market in that long-term time frame, bearish in the medium-term time frame by trading below the Kijun-sen, and bearish in the short-term time frame by trading below the Tenkan-sen, the green line here. Price action is just below the Chikou span is just below the price action, that's the orange line here, and that's suggesting that the market has some downside momentum, not a great amount, but that is confirming what we're seeing in all three time frames, and it is suggesting that if this market does rally, if we do see that first time frame change of trend, we may see the market find resistance at one of these levels extending up towards the middle pivot point level in the area that the Kijun-sen is trading in, and then perhaps selling off again.